What's going on, GAR Capital team? Happy Sunday, everybody, and a happy Passover to all our Jewish friends. It is Sunday, April 13th, 2025. My name is Carlos Garcia. I'm the founder and CEO of GAR Capital. Glad to be with you to do a quick recap of really what happened this past week. It's been a wild one. So many headlines, so many different events happen. Um, Kind of not everyone knows or is knowing what's happening lately. So here to give a little bit of context, kind of review the week that we had, go over a couple things for this upcoming week, and kind of give you my insights moving forward. I don't think you need to watch this video to know that the markets have been relatively volatile, as we know. So let's go ahead and start with the main one, the S&P 500 index, SPX. We're looking at it right now. This is on the hourly chart. If you're someone that keeps in touch with economic data, everyone kind of is on top of the S&P 500. I personally trade S&P 500 futures. We'll get to that here in a bit. But for right now, what I want to kind of discuss is really what I'm seeing in terms of kind of the market dynamics and how is that going to affect the S&P. We went ahead and posted some information for our Discord server regarding key levels to watch if we were to continue lower. So a lot of things have changed just yesterday and actually this weekend. A lot of change since Friday, let's just say. Friday, the week ended green. We talked about that on Thursday. I think Thursday the market was red, and I said, due to the VIX being at 50, at that point, that was a good time to go long, again, in the short term. Everything that we're doing now is day trading short term. If it's options for a little more time ahead, I'll make sure to let you guys know. But for now, we're going to kind of keep it in the day trading model where we're kind of looking for volatility to profit from. Very simple on futures mostly. But here back to the S&P 500, this is a monthly chart, meaning that each candle is 1 month time frame. So I went ahead and put a couple of lines up to kind of give us an idea of what we're really looking at and looking for. A couple things that stand out. Number one, if you're someone that doesn't do a lot of technical analysis, that's completely fine. I try to make it as easy as possible. The good news with technical analysis is that the more you do it, the better you're going to be. Kind of thinking of kind of similar to driving a car when you're 16, 17 years old. When you first started, it was very difficult to either, depending if you drove stick or not, the clutch and the brake and the gas. But at the end of the day, the more you did it, the repetition makes things easier. So, if you're someone that's struggling a little bit to find patterns or feel like you're a little behind in terms of price action, you need to practice. You need to practice doing your technical analysis. Make sure you have that chart time. Weekends are a really good time to do that. Write down 5 tickers and go by different time frames. You can actually set it up where monthly, daily candles, 4-hour candles, 1-hour candle, and then you can write bullish or bearish each one, and then you kind of go over it towards the tail end of the week and see how you did. That's a pretty good practice. But speaking with that, let's go ahead and take a look at the S&P 500. Again, this is the spot index, not futures. So we can see that we do have an upward trend line really since the COVID lows. So again, that's a very, very key level. We're going to go up from 2461, which feels like a million years away, million years behind, let's just say. And we've had a pretty good uptrend. The lowest that we got was October 2022. And then we continued higher. 2023 October was weak as well. So that seems to be that kind of consistent trend, is that you had that May kind of bounce, that candle. You could just say March was the actual low in 2020. Then we had that trend line to the October 2022 lows. And then we had another point of return or bounce from that level in October of 2023. So 2 October lows. Remember that pattern. So right now, a couple things that also stand out is that we bounced right off the 20-month moving average. So when you kind of take a look at your technical analysis patterns, when you go on the daily, keep an eye on the 20-day moving average. That's usually a momentum indicator. So if we go and extend that, we see the monthly, you'll see the 20-month. So now that we're above that, good news is that that is pretty bullish. I'm not going to sit here and say it's not. It is. We are technically away from a bear market, kind of, in terms of we did hit 20% on the S&P at the lows, but we're off them. So we're still kind of relatively in correction territory. So also keep that in mind. But good news, at least with some news this weekend, we had some exemptions in Computers, electronics, semiconductors are going to have their own exemptions, apparently. That sounds like it's changing. From the Sunday news cycle that we had, some of the trade representatives of the White House were stating they're going to have separate tariffs for semiconductors and separate tariffs for electronics. Kind of both sides are kind of clashing. We've read some news regarding Peter Navarro and Elon Musk, not exactly, let's just say they're bumping heads as well in regards to tariff policy. It just seems that so much is happening so quickly that you really can't predict what's going to happen next. And that is pretty much the hard part of day trading. But what we're looking at here is a set of hints or markers. Technical analysis gives us those hints. When I trade with S&P 500 contracts, it's day trading, it's scalping. I stick to the 5-minute chart, sometimes the 15-minute. But again, for trends to see where a bottom will be, which is what we're looking at, that's right here on the monthly. So back to it, we're getting back above the 20-month moving average. Let's go to Market Watch, and this is what I typed up for our members. A couple of levels that were key that I was looking at, because now we're about to initiate a death cross. A death cross is when the 200-day is breached or the 50-day moving average breaches below the 200-day. So the 50 below the 200-day, that is a death cross. Not good for any asset class, whether it's oil, gold, stocks, or the S&P 500 in general. So for right now, we're going to have to keep that in the back of our mind. Maybe on Monday we'll pop higher with some of that exemption stuff. But eventually, if the market just doesn't go straight up for the next couple of days, the death cross seems to be pretty much set in stone as prices continue lower but volatile. So again, we have that death cross coming up. March 17, 2022 was the last time we had it. October 2022, like I talked about what that trend line was the lows. The complete drawdown or the highs were not reclaimed really until January 2024. So that's a drawdown of 27%, a pretty good barometer of what we're looking for. Again, that is a bear market. We know that. Did not hit anywhere near COVID panic levels, but still down 27% for the drawdown. So if history repeats, let's just say that our current peak on the S&P 500, as you can see here, is 61.47. Fair enough. We'll do a 27% drawdown based on the last bear market that we had. That gets us to 44.88. If you could see right here, 44.88. So again, 4,500, we'll just call that, and you're below this trend line. That would probably be a danger zone for sure. Could be a wick, who knows? Downside key levels to watch. Again, we're going to assume that all that we know is all that we know. We're not going to base our investment analysis on what the president decides to do one day or another. That's not easy. That's not what we want to do. What we want to do is have a plan of action just in case these prices hit. Then we'll know what to do, which is pretty much buy. We're not going to go to zero, obviously. Yes, trade policies are a little wild, don't get me wrong, but there's always something to worry about when it comes to the stock market throughout its history. It's just a fact of life. The idea is to take advantage. So we're doing that now with our downside key levels to watch. 4,800 being the 2025 lows. Pretty much right here, that yellow line. 4,800, right there. I put it at 4,811 or so. 4662 is our long-term trend line support. Remember those levels from 2022 and 2023 that I talked about right on the monthly? Right here is kind of that money level we're looking at, 4,600. Now, 4,625 or so. And I'm going to tell you why it's the money level, but we're going one more step lower just in case, 3,500. I think that would pretty much be the worst case scenario. I'm talking full blown trade war, China versus the US. I mean, pretty much the kitchen sink. The worst case scenario. I mean, horrible recession. I don't wish that, of course, but again, that's probably where we're going to go if it's something disastrous. I don't know what that would be. It'd have to be some kind of really black swan event. I mean, COVID wasn't exactly predicted by anybody. So again, anything could happen, but that's a 43% drawdown. Again, that is worse than the COVID crash. A little different from now. We're not going to have the Fed, cut rates to zero tomorrow, and they're not going to send out stimulus. Inflation isn't low enough yet to even consider that. So where does that leave us? 3,500. That is a big deal. That is back to the October 2022 lows, and that's also very, very important. Very much near the 200-week moving average. Why is that important? In October 2022, that's where we bounced. We got close in October 2023, but that 200-week to me, that's kind of that line in the sand where, okay, the lights are flashing, everyone's freaking out. it's either going to be 3,500 S&P and we're really in trouble, or this is pretty much the end of it, and we might just fall slightly a little bit. That is my money target. 4680, let's say 4600 to 4700. Those 100 points, I fully believe that's the money target to buy stocks, regardless of what's happening, because of the fact that it'll be done by fear and fear will be overblown. Again, with the information we know, that's the price I'm looking for. We may not even get down there, to be fair, guys. We may just get, hey, it's all good, no trade issues, free trade for everybody, and then we're going to zoom higher. So again, we can't depend on hope. I hope that President Trump does that. We have to prepare ourselves in case these prices hit. We have the dry powder ready to go to look at the stocks that we want. So that really leads to the question, what are you trying to do? If you're someone that needs the money or needs money, and this is like liquid cash that you want to go ahead and invest in stocks, let's say this is for money that you're saving for a down payment for a house. I would not be in the stock market if that's the case. Again, within a year, you need the money, like your emergency fund, don't. If you're someone that's saying, Carlos, I got a long-term horizon, man, I'm going to retire. Yeah, if you're talking about retirement, nothing has changed. This is a blip. I think I said that in the last video. Just want to reiterate that. And if you're someone that says, well, I want to buy NVIDIA on the cheap, I want to buy Berkshire Hathaway a little cheaper, or whatever stock they want, then that's fine if you have at least over a year horizon. Personally, bear markets don't really last that long. It's usually less than a year, maybe about 8 months. So it really depends on your pain threshold. If you're someone that needs the money, pain threshold's going to be very minute, because that's probably like rent money or mortgage money. Don't do that. You want to have money that you have saved, that you're willing to put to work. The idea is not to live off your investments tomorrow. That would be day trading, but to at least build that nest egg with stocks that are on the cheap when everyone's freaking out. That's kind of the goal. Buy low, sell high. Yes, the old adage. So that's where the S&P is, and that's where I see it. Again, all of this could change really, really quickly with any kind of trade headlines. And this is the last 5 days of the S&P. You could see Monday and Tuesday down. Wednesday, we got a nice trade pause 90 days headline. That pulls back, and then we're on an uptrend. So good news. I do expect us to move higher, at least at 6 p.m. when futures open. So let's go ahead and kind of keep that momentum moving forward as we pivot to futures. And this is what I really want to show you guys. Here's the 15-minute chart. And what I did here is that we had that trade 90-day pause pump, we'll just call it that. And what I did is I built Fibonacci retracement levels here. And you could see from the peak at 55.28, we're going to see if we want to get back to that level or retrace, or we get back down to the lows or retest those levels. Fair enough. Well, we tagged the 23.6 fib levels right around Thursday at noon, and then we bounced, and it was kind of choppy towards an upward, call it flag if you want. Either way, we had one big flag here as well, bull flag, which is a bullish indicator. Hence what I was speaking about on Thursday on our note for our Discord members. We'll go to Market Watch. Let's see, it was very choppy, but went ahead and typed it out there. This was on Thursday the 10th. And I was talking about how I expected stocks to bounce overnight into Friday and tomorrow going into the weekend. So if you guys want access to our Market Watch Discord channel, make sure to first get on the Discord server. Link is below, ticking below here. And then you'd have to sign up for our services, signal services, or teaching, and then you'd have access to that. Basically what I see on a daily basis. If you like these videos, that's pretty much the place you want to go. I also talk in the morning on the radio. That's at 8:45 Eastern time. I kind of do this kind of screen sharing, but it's not recorded or anything. It's to prepare everyone for the day. Back to the S&P 500 here. So we got our Fibonacci levels, and our Fibonacci levels are very simple. It's a path to show us what the next prices will be, and we can kind of set our support and resistance levels accordingly. 54.21 right now is our resistance. We will break above that on Sunday evening, about 5 hours away from now, 4 hours away. When we do, I would not expect anyone to chase it. I wouldn't want my members to chase it either. Best case scenario for us, we get that pop, and then we retest the breakout, 54.20. If we can get there, we can keep a stop relatively tight, maybe 20 points or so, 25, and then we'll stay bullish, looking to target the retrace of 55.30. If we don't get it today, we will probably get it on Monday. And I say that because it is a pretty bullish day in the pretty bullish week in terms of the stock market almanac, at least historically speaking. Monday's a bullish day, Wednesday's a bullish day, and Thursday is. Friday, the stock market is closed for Good Friday, everyone. It is also Easter weekend. So no stock trading on Friday, only a 4-day week. So be careful, my options traders. So again, we're going to see a boost today. Prepare for that. And then if we get a pullback, we're looking for a retest of this breakout at 54.20. Once we get there a second time and it holds, that's saying that the buyers are defending that support. We can keep a stop below and then go long again, and we can go as high as 55.30. And that's pretty much what we want. Do the flip side. What are we looking for a short? We're looking for right around 53.35. Mind you, that's a pretty long ways away. So again, I'm leaning that we're going to bounce on this positive news of computer exemptions, which directly affect one company, and its name is Apple Computer. Apple Computer, we did, or not Apple Computer anymore, it's Apple. So Apple, we traded that, our option signals. Well done to Nick. We did the 210 calls, buck 63 for now this week's expiry, the 17th. I don't know if he's still holding. I see that the members were alerted to close, which is great. I don't know if you guys have runners, but that should be a beautiful one. And if you do, all my options traders, make sure to put it here on our trophy room where everyone shows their excellent work. So proud of everybody. So in terms of options, again, Apple is nothing new. That's something that we were looking at, beautiful flag pattern, and we went ahead and broke higher. Let's see if we break above 201.58. I fully expect that we do. And if we do, what are we doing next is really the question. So we can use 201.58 as our break point, use kind of 196, 197 as support, and then we're looking for 210 strike. If we're looking for a next leg higher, these exemptions stay. Really the level, in my opinion, if we were to bounce where you feel the necessity or the need to want to buy Apple at those levels, you're looking at 220. 220, 225, I would say once we get there, that was the support that held for pretty much over half a year. That would be a nice start where you could start kind of nibbling towards stocks, or you can just wait for the lows if we get there. Again, all of this is fluid based on the headlines and the news that we get. So if we continue lower, we have our path. If we continue higher, well, at least we know where Apple might head to if these exemptions stick. Let's take a look for the week and what is happening. All right, major economic reports. So I found two. I use Forex Factory mostly, but this one was from Twitter, Market Watch. So the thing here is that it does not have that Fed Chair Powell is going to speak. Apparently, he is going to speak 1:30 on the 16th, which is Wednesday. Other than that, it's just retail sales. So pretty quiet on the economic data front. I wouldn't be too worried about what's out there. I do expect retail sales to come in slightly lower. I don't think that's going to be a major market mover. The major market mover now is the tariff headlines, not inflation. That and bond yields. Bonds are important because if bond yields go higher, interest rates go higher, mortgage rates just hit 7% as of Friday's close. Let's take a look at the earnings calendar. We have Bank of America, we have Citi. JP Morgan had a great earnings report. Let's see anything else that stands out here. Amex is on Thursday, DR Horton and Blackstone, Charles Schwab, Ally Bank. Netflix reports on Thursday. So let's kind of chart these here together. We'll do Goldman, we'll do Bank of America, Citi, and Netflix. I'll move this over. Let's get started. All right, Goldman Sachs, which I feel is probably one of the better banks to own. Personally, looking at Goldman Sachs, 400. That's the level that you're looking at for a target to buy. I don't know if we might get there. That's really the issue. Head and shoulders pattern on the daily, not ideal. Get the 20-day moving average below the 200-day moving average, also not ideal. Let's take a look at the weekly, bouncing off the 100. That's a good sign. All right, fair enough. Let's just keep in our head 400. If we get to 400, that is a buy level on Goldman. Would I buy it here? Not ahead of earnings, obviously not. I don't expect really much in terms of new data that we don't know of. Kind of setting up an inverse head and shoulders. I'm pretty bullish the banks. I believe that the banks would be the first to recover from this tariff tantrum, let's just call it. 520 for a break. If we get there, then you can go long to 560, which would be a retrace of the fall from the 3rd of April, which I believe was near Liberation Day, quote unquote, when President Trump unveiled his tariffs. So that's where I see in Goldman. Let's take a look at B of A. B of A above 38, that's kind of the first level I'm seeing, maybe 38.50. If we get there, Wells Fargo didn't beat expectations. Nice bounce of support off 33. That'd probably be another level to watch if you get a pullback. But a nice gap to fill here at 40. So maybe we trek a little higher. Once we break 38.45, I would be targeting right around that 40 level on Bank of America. Seems to be holding support. I think Bank of America and Goldman Sachs move higher this week. Let's see, Citi. Citi reports on Tuesday in the morning, Goldman Sachs on Monday in the morning, Bank of America on Tuesday morning. 65 right off the rip. 65 is kind of what we're looking for. I would say a break of 65.50 would confirm that breakout of 64.04, at least give us a little more room. 55 seems to be that support, at least if we were to fall lower, that would probably be the retest level. You do have a gap to fill at 68. I would say wait for 66. If you can get above 66, I would target the gap fill at 68. It's still an upward trend. Citibank, I would be a little more neutral on, but I'd be more bullish on Bank of America and Goldman Sachs. And then let's go to Netflix. Yeah, Netflix is bouncing off this top end of this trend line. It's a good sign. The only concern I have, head and shoulders pattern, it did fall, but again, price was defended right off that 200-day. So props to Netflix. Let's say for moving forward now, 800 is a good buy level. In terms of what I see moving forward for Netflix, it really depends, obviously, on guidance and subscribers. I think Netflix will be fine. They're not exactly tariff sensitive either. So we'll say that 900 is support on Netflix. I expect to go higher. I expect Netflix to move higher, but a break of 930 to me, you could target the 1000s if you can get to 130. You may have a little bit of a pit stop right at 960. That is your 50-day moving average. Taiwan Semiconductor also reports on Thursday before the bell. This is one that a lot of people talk about. Triple bottom here at 140, bouncing. You have a gap at 166. Break 160, target 166. That'll get you to the 20-day, excuse me. Still need a little more clarity on tariff policy before you can really invest in this name, because anything could change as we know. But above 170 will give us a trend line breakout. Mind you, that is about what, $13 away. So we're not there yet, but that's something that we could be looking at, as you can see here. Break of that 170 could be talking about a breakout, but we need a lot to go right. If we break 140 again, there is trouble ahead for Taiwan Semiconductor because you got a gap to fill right at 103. Tough one. I go a little more neutral there on TSM. So I'd be better served looking at a Bank of America and a Goldman Sachs if I'm trading earnings rather than or Netflix looks a little better. It's going to be expensive rather than a TSM or a Citi. So that's what I see this week. What do I expect this week? It's pretty simple. I expect more volatility. Not exactly brand news here. But again, I'm going to keep my eye on S&P. And there's one more chart I want to show everybody. It's futures and it's gold. Gold, I want to be short gold, actually. So keep an eye. I know, short gold. Are you kidding me? Let's take a look at the weekly chart. And you can see pretty clean, almost a breakout there. But we'll take a look at the daily to give us a better context here. Move this here. Okay, so you have a nice clean trend line. It's really going to be either rejection breakout, right? That's kind of the coin flip that we're looking at. But keep in mind too, if the stock market does bounce on the positive note regarding the exemptions of electronics from China and other tariff exemptions, again, depending on how the market really accepts the news or absorbs the news, I would expect that gold will pull back to 3,200. So I'm going to be bearish gold this week to 3,200 to a target of 3,200, and then we'll use 3,270 as resistance moving forward. Once we get back to 3,200, that's where I'm kind of rather neutral on it because I do think gold in this uncertainty is going to catch more bids, but it is a little overbought. So again, we're just playing technical bounces, trying to get our money how we can in this market. With that being said, it was a great week all around. Futures crushed, absolutely crushed. Let's take a look at our results. We went short, we went long, we went short, we went long, long, short, short. I mean, back and forth, back and forth. Depending on, again, how you closed out and how you moved. We did miss that big pop on the pause in the 90 days. There was no way I could have been that quick to catch that one, but we still had a great week on S&P, 330 points with gold futures at being 35. And options had one of the better weeks of 2025, even with this volatility. And it was a kind of a tough hold into that Monday. A lot of our members were not feeling good, and I understand, but that pop really helped everybody. Microsoft, Nvidia, Amazon, Goldman Sachs all hit triple digits with Qs, American Airlines, and Apple. Apple should bounce or continue to soar on Monday. I'm sure if you guys are holding runners, our members, you guys are going to be pretty happy with that if it holds. So that's what I got in terms of the week. We went over the calendar. We went over pretty much the downside levels that we're looking at, some upside levels in futures. We went over some names that for earnings that may be on your radar. So with that being said, thanks so much for your time. I enjoy doing these videos. If you do like these videos and want more every week, make sure to hit that like and subscribe button, comment, kind things. We really do appreciate it as always. Thank you guys for being here. GAR Capital at your service, always 10 years strong currently, be 11 years in October. Been through 3 bear markets now. This would be our 4th technically, so how fun. And we're here to navigate it all with you guys, and glad that you're here. We'll catch you for Futures Open at 6 p.m. See you on the Discord server team. Cheers all.